Hello everyone, welcome back to another Lumley trading live stream. Sorry if you caught this 10 minutes ago. You joined and there was no audio. I had my laptop updated this morning and I think it disconnected the mic or something, but now everything is rolling once again. So again, we went through everything for about 10 minutes, realized nothing was wrong. So we'll go through it all again. So firstly, Delta again. Delta had their earnings, came out an earnings per share of 268. Definitely a lot better than the previous previous earnings. They only got an earnings per share of 25 cents previously, so strong on that front. Now we are extremely overbought areas, so that's why you're seeing the move to the upside being quite lackluster and a very strong pullback relatively quickly. Because again, when you're at these overbought areas, and I'll show you what I mean by overbought areas, whenever you tend to have earnings or relatively strong earnings at these basically overbought areas, it's very hard for a stock to kind of be strong off this sort of release. So what you instead tend to see is the earnings come out, if it comes out strong, then you get a bit of a move up, or if not, you kind of just stay in line. However, if the results come out in line or negative, that's when you get those big mega moves, and that's how you can usually look to play the direction. If earnings come out when you're already extended and they come out positive, again, it's usually not going to be much upside. So if I'm playing the options, I'm always playing against the overbought area, or if we're oversold, again, playing against that, because that will usually be where you get the big moves. So those are the key levels I'm paying attention to. And Delta, again, they're at 51.95 and 52.50. So paying attention to those. I wanted to point out on Unity as well, because we are strong on this. We are at a 6-month high, not quite at the 1-year high, but the 6-month high we are at. We're at 46.70. So again, we are broken those kind of previous range. We had to basically double top around $45. We are now breaking higher, but this can be good because coming into $49.50 to $50.50, this is our third deviation between the 6-month and the 1 year. So this is really what I'm paying attention to coming into this range, looking at it short bias. Again, potentially could be a day trade, but my main focus is going to be from a swing trading perspective. So that's how I'm going to be looking to trade this. I think this could be quite a nice trade. So that's one thing I wanted to be paying attention to. We'll quickly see if there's any other things. Again, we had LGHI. Couldn't see what the news is off this. I'm assuming it's just a reverse split. It's not telling me on Thinkorswim. But again, the stock was at about 10 cents and now opened up around $5. So some sort of reverse stock split must have been going down. So then the leading gap on the day is JZXN. Now with this stock, I would be cautious. And the reason I say this is, again, when you're looking at the longer term charts on the 6-month, you are becoming extremely overbought. And that's because for the last 6 months, the price action, has been pretty lackluster. You've had the occasional pop, but again, they get sold straight into. So the one we're having right now, I wouldn't expect to be any different. So again, if you are long bias, I would be quite cautious. But the interesting thing is on the 1 year, again, we're nowhere near overbought. So probably not something I would want to be swinging. And even if I was, it would be small size. But again, going to be quite a difficult thing to trade because we can only trade it long bias because there's no shares available to short and there's no options available on the stock. So that would be one thing to be paying attention to on that. Another gapper we have is SXTP, recent IPO 2 days back, or literally yesterday. IPO'd at $3.70 and already hit a high of just under $9. So again, quite a big moving stock. Could potentially be a play, maybe something to be keeping an eye on. I guess we'll see. APDN actually is moving as well. This tends to be, this name is a name you tend to see every 3 months or so pop up. Especially again, if we zoom out to the 1 year, you can see exactly what we mean by this. Massive moves on stocks like this, but again, they always get sold into. So I wouldn't be looking to hold this from the long term or holding this in the long term. Now, it is hard to borrow, so it'd be hard to short the shares, but depending on your broker, but we can look to trade it through the options. Again, if it's hitting these oversold areas, 160, 184, 260, 350, any of these levels really, we could look to play them through the options. That could be vertical spreads or outright puts to play the direction. Again, hard to borrow, so not to say there isn't any available, but just if it's worth the cost to get the shares available, or depending on your broker, you might not actually even be able to reserve the stocks to borrow. Plug is also a big mover today, up 8.5%. coming into its first deviation on the 1 year at 12.87. So again, potentially be looking out for that. We're about 30 cents off from now. Quickly plot this on the chart just so we know where it is. Again, that's a 1 year first deviation. Can be paying attention to that if we continue up on plug. Havana, also a big move to the downside. Forgot we did cover this before, but the microphacy was not working. So two key things have really happened on this. So firstly, what happened? The stock became extremely overbought. We called out these levels before we hit it yesterday. We said we're going to be short bias exactly when we hit that third deviation on the 1 year, which was at $42, went through by about $1 or $2, and then we got a massive pullback. Now we're down 7% today, and we sold off about $4 after we hit that level yesterday. So having a big move to the downside. Again, this is to be expected because we came into a very overbought area. But at the same time, I think we also had news from JP Morgan changing their price target. Here it was. So 6 a.m. release, JP Morgan downgrades Havana to underweight, announces $10 price target. Again, don't forget the stock was at $44 yesterday. So massive sell-off off news like this. But again, we kind of already knew it was very overbought. Probably not going to be something that holds. Don't forget, you go back 4 months, the stock was at $3.50. Whenever you see a stock like that go from $3.50 to $44, it's probably not going to hold. They probably haven't in any way justified a move like that. Now to carry on then, Domino's Pizza. You can actually now see that on 2 charts, but either way, this stock, I am waiting for it to move a bit more. The reason I say this is to quickly update the levels. So we have 383.75. It is at its third deviations, but really I do want to catch this going a bit higher before I catch it short bias. And the reason for that is, again, we kind of missed the open yesterday. That would have been where the prime trading opportunity was on the open. The first 5 minutes kind of provided that upward opportunity where we could have been looking at it short bias. Just oh, sorry, Squawk was playing, but I realized that's muted. So let me have that playing in the background just in case he speaks again. Yeah, so on Domino's, yeah, we missed kind of the initial move in the open, which was quite annoying. Would have been a good opportunity, but we did miss it. So now kind of waiting for a bit more of a push up. We probably won't be patient all the way back to 402, but if we can kind of get in at maybe the break of yesterday's kind of pullback high, maybe getting in at around 395, look to get in a bit of size. If we miss it, we miss it, but ideally we will start to push up that bit. And then again, we can look to trade that bit short bias, which will be my game plan on Domino's. Again, we went through Unity. That's going to be one of my main swing shorts as well coming up. Delta, I think we covered as well. Sold off at earnings, now basically coming into flat, holding the anchored view up quite nice now though. So again, we'll see if we can actually hold that for the day though, because if so, can be quite bullish. But again, really looking for a move to about $51.50 before we can start taking Delta short bias. But again, that will be a nice swing short. We'll probably put a bit more time on this because it is a bit more of a slower burner. You're starting to see it trade a bit like Carnival Cruise Line. But the difference with Carnival Cruise Line is it has already hit all its deviations. And so if it's retesting them now, it's basically retesting it on the momentum, which I don't like to short. I only like to trade them the first time they come in because that's near enough when you get, don't want to say guaranteed pullback, but a strong chance for that pullback. Again, plug is pushing higher, 1260. I think we had a level at 1280. We got it at 1287. So again, that's what we're looking at. On plug. Again, if you have any stocks you want me to run through, I'll run through them, but otherwise we'll just let a bit of the TV play through. And again, we do have Squawk in the background. This is Squawk TV, but that's not going to kill out the key headlines. The key headlines is not on the screen. You'll just hear it in the background. Again, he will speak as it's coming through. Oh, it looks like they've already gone back to adverts, so I guess we'll go for a bit longer. But yeah, that is the key thing, is with the Squawk, yeah, we'll just kind of shout out of, well, whenever the news comes out. So
S&P Global Rating says strong US jobs report increases July rate hike odds.
But yeah, that's basically what the Squawk will be anyway. You'll just hear that in the background.
And Celsius Network banned from trading and fined $4.78 billion by the FTC.
I remember actually seeing some of this Celsius stuff. Don't know what their ticker is, even if they do even have one. That's what I'm kind of trying to see now. Celsius. Okay, we got Celsius Holdings up 3%. I don't know if that's the company it's relating to though. Might be, it could be they've taken it relatively well because again, then you know what you're getting, you know the fine that you're getting, but I'm not too sure. Oh yeah, that's what I've gone on to. I'm surprised they're going up so much stuff getting fined, unless this fine has been rumoured for a while and it's just a confirmation you kind of know then how much they're getting fined. But I haven't really heard of
this stream is sponsored by TickStrike.
Oh. But yeah, I haven't really heard about it too much before today. Unity still pushing up. That's, I think, going to be the main trading opportunity I'm looking at today. Need about another 2.5 points. And then from 49.50, looking at that, that's a relatively nice swing short. Also have SoFi down just under 4%. Again, ever since kind of that student loan news came out, this has just been pretty weak. Kind of just consolidating at this level. You're starting to see the deviations readjust. I'll bring this up real quick now as well. You were seeing it kind of hit its second, third deviations holding in that range, but because the price is staying elevated but consolidating, those levels are now readjusting, so we don't actually seem extremely overbought anymore on SoFi. We are still overbought, just not really that extreme anymore. So that's one thing to be paying attention to, I guess, on SoFi. Yeah, I don't think anything else is really moving too much. Again, the SPY and the S&P is holding up quite well. Ideally, if we can see some sort of a pullback, would like to be getting long on the anchored VWAP. And yes, not really seeing too many opportunities today. I thought a lot of alerts would have gone off, but nothing much has really come off.
Large scale contracts with third parties, companies that are in hard to decarbonize industrial sectors, the fertilizer business, steel business, industrial gas business. This pipeline allows us to continue to accelerate and grow that business, do it at a much lower cost, and do it a lot faster with a very large opportunity to further reduce emissions.
Wow. Exxon is now the center of the universe of sequestration. They are the world leader. They've gone from being a company that I felt really didn't care to being the company that cares the most of any one of them. This is a remarkable, Darren Woods, is a remarkable transformation. Quite frankly, remarkable. I love Denbury. It's a great company. They got a very good price.
Yeah, using some of their currency here as a leverage.
Geez, I tell you, things are happening. The oil companies really understand. They hear the drumbeat. They want to be good citizens. Denbury is the company that has the technology, and Exxon wants it. A lot of people thought that Denbury would do. I had Denbury on. I asked them over and over again why aren't they being bought. But this is about. I know that there's a lot of people who don't like fossil fuels, but Exxon is the world leader in trying to figure out how to make it so that we wean ourselves off in a good way. Amazing.
Yeah, well, and the optics around this current heat wave adding to the societal pressure.
Rockefeller would be just rolling over his. Yeah. No, Rockefeller's actually, there are two Rockefellers.
He might have been doing the same.
There's the beginning one, we had 100% of the market, and then the bad one where, well,
yes.
No, just kidding. Obviously, it was bad when you had 100%. Now, tonight I have Nikesh Arora. Yesterday, Palo Alto was down big because of something that Microsoft did. I got to tell you, I'm smelling vaporware when it comes to what Microsoft's doing. Palo Alto shouldn't be down. If you're short Nikesh Arora, what do I say? Invite me to your funeral.
We actually got some price target increases as people see the threat as manageable.
I mean, look, I think Microsoft's real when it comes to buying Activision. I don't think they're real when it comes to stopping Palo Alto.
Jim, we'll see you tonight.
Yeah.
Important day. Mad Money, 6 p.m. Eastern Time. Dow's up 100, closing in on 4,500. More of David's exclusive with Iger when we return.
The Dixie falls to a new 15-month low, last down 0.52% to 99.96.
Yeah, I was looking more into that Celsius thing. Yeah, it's more of a crypto network. Because when I saw ban from trading, I thought it meant its ticker, which was quite weird. But yeah, I never really heard too much of the company, so I'm not going to be looking too much into that.
UK Finance Minister Hunt says new public sector pay deals mean finding an additional £2 billion this year and £3 billion next year from department budgets.
Again, plug still pushing up, 12.87, so about 20 cents off from that level as of right now. Going to be the key thing again. Cavanagh still selling it off, starting to pull back a bit. Looks like we could potentially come back and retest our anchored VWAP. So if we do, could potentially look to grab that short bias. Again, we have just hit 10 a.m. as well. But yeah, coming into that anchored VWAP could be quite nice to kind of catch this downward momentum. So we'll see how that plays out. And everything else kind of seems in line. You still got Unity pushing up again, just 49.50 is the key thing I'm paying attention to on that. If we can push higher, Snow, I think they had one trading level nearby, but that was about it. They have one level at $181.60 first deviation, but we have hit that a few times, so probably wouldn't be looking at that with the biggest of size. MGM Resorts coming into its first deviation actually at 49.06, and Snapchat actually at its third deviations now, at 13.87 is its 6-month third deviation, and its 1 year is actually right below that at 13.80, which I think we've actually already hit today.
Euro rises to a fresh 16-month high of $1.1195, last up 0.6% at $1.1191.
Yeah, Snapchat at its third deviations then $13.80 and $13.87 are the two third deviations. Coming into there, could be looking at a swing short. Don't know when they got their earnings coming up. So let me quickly have a look at that. Because if their earnings are coming up relatively quickly, could be quite a nice opportunity just to start hold potentially some puts coming into that release. I'm trying to find when their
Eastern
release comes out there.
Good Thursday morning and welcome to another hour of Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla, live as always from Post 9 of the New York Stock Exchange, along with David Faber, who's live today from Allen & Company's Sun Valley Media Conference after his big interview with Disney chief Bob Iger. Much more on that in just a moment. But first, take a look at stocks. Going strong here, up 0.6% on the S&P 500. Every sector higher except for the two defensive ones, real estate and utility. Consumer discretionary is going strong. Financials are having a good day. They're up 0.25%. Communication services, NASDAQ up a full percent. So far for the week, we're up almost 3%. And Carl, the latest data point that investors are excited about and celebrating is PPI, which is just further evidence. This is the wholesale inflation numbers that inflation is really moderating meaningfully. They were really encouraged by yesterday's consumer price index, even though the bias going in was for a softer number. It came in even softer than expected. And then PPI today increased by just 0.1% from a year ago, smallest increase in nearly 3 years. I think if you add on top the other data point we got, which was also important, jobless claims came down 237 from 249 in the week before. Yes, it was a shortened week because of 4th of July, but we're not seeing any major signs in this economy that lay.
So yeah, we do have Snap's earnings coming up. They're coming out on the 25th, so a week Monday. So yeah, if we're still staying up by these highs coming into earning, that could be definitely a potential swing short to be looking at.
They're able to lower inflation while keeping the economy growing.
We had McCullough yesterday on this hour say the soft landing, this is the stuff it's made of, and we might actually get it. But you're right, good labor data, or at least decent labor data, more continuing disinflation. And of the earnings we're getting now as Q2 kicks off, Pepsi and Delta, among them, a beat and a raise. I mean, I'm not sure what else the Bulls would want right now.
Right. So let's talk Pepsi for a moment, because I just got off the phone with Hugh Johnston, who was on earlier. He's CFO and vice chair, and they raised guidance. They saw very strong growth. I think what stood out to me most were his comments on margins. He said there was a big margin improvement in the quarter. And if you're thinking, oh, yeah, that's because they just raised prices. No, he said prices just rose with commodities. It's because we're investing in productivity. And he said that will sustain over a long period of time. It's a really important signal to investors, because everybody's worried that when prices normalize and revenue growth comes down for these big consumer products, then the margins are going to get hit. But he said, no, we've automated all this productivity, warehouses, for instance. It's all automated, getting the cases to the trucks, and that's going to ultimately result in more margins. On inflation, he said, we're just about the same price. We're raising it at the same as commodities, so we're not, gouging to preserve margins or anything like that, and it will come down in the back half of the year. But Carl, the biggest takeaway I have from Hugh and Pepsi is that services inflation and the U.S. consumer is still strong. He said all the growth was in restaurants and convenience stores, double-digit growth in convenience stores, 20% growth in food service. That's restaurants, it's colleges. If you're Jay Powell looking at the Pepsi report, I think it suggests that there's a lot more work to do, because he's not seeing a slowdown in the U.S. consumer. And yes, inflation is moderating, but nowhere close to 2019 levels.
We'll see. I mean, some of the survey data out of the National Restaurant Association shows shopper restaurant intentions on the decline and open table seating on the decline. So we'll see how long it lasts.
But they're still high, I guess, is his point.
Yeah.
And is the point. And we're seeing numbers, and yes, it's in certain parts of the economy. It's in staples and travel, like Delta. You're not seeing in the manufacturers. Fastenal didn't have great numbers today. But I don't know, the market's really excited and moved on, one and done for the Fed. July, they're expecting an increase the week after next. September, not. November, not. And they're very excited about it. The TS Lombard, I don't know if you saw this note this morning, Fed hubris on steroids. The idea that the market is just the only scenario that the market is pricing in now is that Fed's going to stop and economy's going to be okay, because history really does suggest otherwise.
Yeah. Meantime, you got the spread between year-on-year CPI and year-on-year PPI, widest since the incarnation of the PPI, which is pretty good news for corporate margins if you're worried about earnings over the next 4 or 5 weeks.
Right, because PPI is what goes in, the wholesale level and the consumer level. But I think the bottom line is they're both coming down. Market's encouraged about it. Market's not betting that it flares up again if the economy goes strong. And that is, I think, a wild card, and I think what the Fed members would be worried about. We're going to talk to Mary Daly next hour, San Francisco Fed president. It's an exclusive. She was sounding a little hawkish, but that was before the CPI report, so we'll get her updated views. And David, it'll be really good to talk to her because it's her first interview, actually, believe it or not, since SVB failed in her district. So we can talk a lot about what that supervision had looked like.
Yeah, I'm sure you will. I'm looking forward to actually hearing what she has to say, because there are a lot of questions in terms of how supervision went there, what really happened, how it went awry, why they allowed the bank to pile on those long-dated assets, although they weren't risky assets, again, to be fair, and how, I guess, Sarah, anybody can combat, when you lose as much as $42 billion in deposits over a very, very short amount of time. Sarah, I wanted to come back to you on something you said about Pepsi I thought was interesting, which is the automation that they're doing in their warehouses or their distribution centers. Did they give you any sense as to how much that's contributed to productivity, and or will it continue to? Is that something they're rolling out over time?
Oil futures extend gains, Brent crude up by $1 a barrel.
Right, so I thought the most telling comment he made with regard to that is that margins will remain sustainably higher. And that was a signal that, look, when pricing increases fade and revenue growth fades, that we're going to continue to have strong profitability because these are more permanent changes that they're making in the system. And I asked him an example of it. He said, so now in the warehouses, the product goes into cases, it's automated. And it goes into trucks, it's automated, as I mentioned. So didn't exactly quantify it, but did cite
and oil futures extend gains, U.S. crude up by $1 a barrel.
From here on out, and that'll, he thinks, give them an edge over competitors when the environment does change. And right now, we're kind of in a sweet spot where consumers are paying up these really high price increases that we're seeing.
Yeah, interesting. Again, I particularly was interested in hearing about those productivity.
Yeah, we've just hit them on the snap. Probably, actually, let me open up some trading view. I'm probably going to take some shorts on this. Plug 7 cents off, starting to sell off a bit. Could just be a temporary pullback. We'll see how it acts.
buy the stake from Comcast.
Yes, correct.
And I just wonder, is this something you're thinking about, but you're not sure? And, when we sit down 6 months from now, you go, we forgot. We're not going to do that with ESPN.
Sorry about that. Forgot the thing was muted.
That I've focused on over the last 7 months is understanding all of these businesses, where they are today and where they could go, and which businesses are going to throw off the most shareholder value for this company and its shareholders over time. When I came back, I was open-minded about Hulu because there is this agreement with Comcast that actually calls for a transaction of their stake to us in sometime in 2024. And I didn't want that to be an automatic. I wanted to look at that objectively. I spent a lot of time looking at that as part of the future of our streaming business and ultimately concluded that we would be better off having Hulu than not having Hulu. And in fact, the plan is for Hulu to be available starting the end of this calendar year as part of the Disney Plus offering. So in terms of the path to profitability of that business, which obviously is a tremendous amount of focus on, a lot of attention, combining Hulu and Disney Plus is a major step in that direction.
Right. We're jumping around a lot, as you'd imagine we would. Let's quickly on Hulu. Your expectation is then that you are going to come to an agreement with my parent company, Comcast, in terms of the purchase of the 33% you don't own.
Correct.
Comcast wants the valuation to be well above $27 billion. I think that's the floor, correct?
There's a mechanism to ultimately determine its fair market value, and we'll go through the process with them. The goal is to do it as quickly as possible. We are going to merge the apps, though, at the end of this year. The agreement with Comcast does not get in the way of us doing that, and the combination of those apps is designed to obviously help.
Yeah, I've now put out the order then for Snap. Found out the way I went through the different ways I'm going to trade it. Probably going to do it through covered stock. So again, this means shorting the shares, buying the calls. Till you define the risk. And considering it's easy to borrow, there will be no fees to short it. So it kind of seems a way. And again, I'll probably go out. Let me quickly see the price difference. Going out 8 days, so next Friday, you're going to be risking, as of right now, about $55 per 100 shares you short. If we go out 2 weeks, be risking, then it's 150. So we'll probably go out the 8 days and see how it goes out. Because if it goes against us, we could just re-enter next week with the size that we didn't take today, and it will be even more discounted. So not really too much point getting in with that. Kind of paying 150. Now it'd be cheaper to do it any other way. So yeah, looking out 8 days.
So it's determining which ones are going to be the growth businesses. I've said parks and resorts, the movie studios, and streaming, and we should talk about that because so much has been done there.
Yeah.
And figuring out a path for ESPN to be a direct-to-consumer business, and staying in the sports business because we have a very, very unique position, an enviable position in that business. And I do believe it's a business that can make the transition successfully.
You do?
From
Why?
linear.
Yeah, tell me why. Because I'm looking at an NBA contract that could double for you and or others who choose to participate. I mean, sports rights continue to go up for the very reason you're stating here in terms of because they have such appeal on a broad basis. But can you make it work economically in that model?
Well, one of the things that we're trying to determine now, which is a factor in terms of the timing, is making sure that when we do it, that it is economically viable. I believe it will be, but it's a decision that has to be very carefully timed, carefully made, carefully considered, and that's why I've talked about possible strategic partnerships too.
Of course, that day that we've been talking about, Carl, for so many years seems to be very close now in terms of ESPN no longer being really a pure cable network. Obviously, ESPN already is a streaming option, but we're talking about moving the entire thing to a streaming opportunity. Something, that I guess first came up, when was it? That August of, I don't even know how many years ago, Carl. And since then, we've watched linear cable networks just decline and decline, and frankly, decline at a faster rate than many of us, including Mr. Iger, had thought was possible, given the years that have already gone by with those substantial declines.
Yeah, I was just thinking back to his comments in Code last September, David, where he said, I'm, quote, not bullish on certain elements of the traditional cable and satellite business. Linear TV, I can't tell you when, but it goes away. If you were just in that business, you were in a world of hurt. So his comments today kind of reflect the view he's had for a while.
Yeah, in fact, he said he may have been a little optimistic. That gives you a sense of just how bad, when he said that, how difficult things are right now. Again, I made this point earlier. These businesses, though, including, by the way, our very own, continue to generate a good amount of cash for the companies that own them. It's that cash that's generated to help you obviously fund the losses that you have to take on in trying to develop the new businesses, namely direct to consumer, which has now been around for a number of years, but really which has only one truly profitable entrant, and that was the one that didn't have a linear cable business to start with, namely Netflix.
Question, David, on the contract renewal. I mean, clearly Disney is facing a lot of challenges and he feels like he has to stay, right, to fix them. This is just one of them. How much of them are his own?
An alert on XPOF. I'll quickly run through that, but I think that's an old kind of runner, so probably won't be any significance.
You know, there are those who would argue that it was his decision in some ways to move so aggressively into direct-to-consumer that drew everybody else who was in the media entertainment space to do so, and to do so in a headlong pursuit of subscribers. Bob will push back on that and says, I had to do it. I saw what the future was going to be. But that, I think, is one of the key questions. You know, was there
Okay, yeah, looking at the stock, yeah, it's an older kind of runner. It's one where we had a massive sell-off before, came into the final deviation, obviously got bought into, and now just hit the alert. I don't know why. There's probably some sort of a target that was probably placed, but bouncing nice off those levels either way.
getting from subscribers.
So taking a look at the Fear and Greed Index, 80 out of 100 equals extreme greed, and the Crypto Fear and Greed Index, 57 out of 100 signaling greed.
Yeah, I know.
So greedy on that, looking greedy on Unity as well, again pushing up now to 47.50, still waiting for, I think it was 49.50, yeah, 49.50 as that first target.
Will continue to be the case. Mark Parker, chairman, I mean, that's got to be their number one. But that said, Sarah, it's not something now that they are rushing towards. It was unclear to me. I haven't been able to fully understand, did they really, how deeply did they already get into it? You know, you have the three division heads, all of whom were here, by the way, I believe, watching the interview. And you have to believe they are the competitors for that job in the future. But it is interesting, isn't it, that, you know, after all this time, there's really been an inability to find somebody to take over for the long term. Obviously, Chapek's tenure was quite short and not successful.
A little rocky. All right, David, we'll see you in just a few. We're going to hear much more from your interview with Bob Iger. As we head to break, here are three big stories we are also watching this hour. S&P and NASDAQ trading at 52-week highs. Our next guest says there's room to buy here. Citi's Scott Kroner joins us to discuss. Plus, Delta turning lower despite record results by CEO Ed Bastian sees gains ahead. And more from David's exclusive interview with Bob Iger.
And again, just like she said, Delta had record earnings, and why are they not moving off this? Exactly from where they are placed. Again, extremely overbought. And like we said, we usually play these bearishly because even if it comes up strong, it's gonna... Oh, if it comes up strong, it will push up, but probably not much. If it comes out in line, a small beat, or a massive loss, this stock will crumble. Considering it the best... yeah, considering this was their best earnings ever, and we sold off, we're still selling off, I mean, we're down now 1%, just shows you how strong it is to be paying attention to if they're overbought or not. But yeah, that is super interesting, just things to be noting, really, in general. I think right now it's just being more of a patient day. Yeah, Delta selling off, so might have to miss a swing on that, which is a bit annoying, but don't really want to get in premature because, you know, it's still, we would want to still see about 1.5% push up before we get into that. and then a plug again missed now our target by 7 cents, might pull back to VWAP and then push that level again. However, if you see the VWAP getting close to the level, wouldn't be looking short buyers on it because it's showing the buyers are more in control. Again, Unity still strong, moves to the upside. We've only had one red 5-minute candle today. As long as we can push up to 49.50, short buyers. Again, Domino's Pizza kind of just staying and hovering around its anchored VWAP. Kind of want to see that break of 393, and then again, as we get that pop, probably we'll be looking to get in that swing short. And we're having the ES pull back into its normal VWAP. Again, that's on the futures. SPY is already broken below, so be paying attention to that. If we can break below it on the futures as well, then our next targets, I guess, will be yesterday's highs, but I wouldn't be paying too much attention to them. I don't trade them. I just like to know where they are. My main focus would be coming down to the anchored VWAP, which I think the SPY would hit first and the futures would follow. So again, we'll see how all that plays out. And then, yeah, the VIX is pretty flat on the day as well, kind of just saying around 1330.
S&P and NASDAQ trading at the highest levels we've seen since April 2022. Our next guest says he still sees room for marginal buying. Citigroup U.S. equity strategist Scott Cronert has a year-end S&P price target of 4,000 and joins us now. What takes us even higher from here, Scott?
Well, I think, the work we've done on what we call the big seven, or the top 7 names within the S&P that in aggregate are about 27% of the index, but have contributed 3/4 of the index gains. You would think with that type of concentration effect on the S&P that there'd be more signs of performance chasing in that component of the market. And our work shows that surprisingly not. Mutual funds remain somewhat underweight these names, and there's still room in our view for retail investors to enter the fray here.
But don't you think it's as good as it gets in terms of the outlook for the Fed being able to squash inflation but not kill growth or really hurt the job market?
Well, I mean, our view and our 4,000 end of the year target has been predicated, since the past month or so on this view that there probably is still a recession risk as we get towards the end of 23 and first part of 24. That's being mitigated, obviously, in terms of the sentiment reads off of the CPI and PPI. So there is still this tag-on effect of...
Bradley talking about the snow first deviation extended. Let me have a quick look on that then. Oh yeah, the 18160. Oh yeah, we'll see that. It could be quite nice. Could see a pullback to VWAP and then hopefully, I guess, a retest and a break. Are you looking to trade that in any way then? You're looking for the continuation.
Of May, and that's still where we stand. I mean, the view here is you want to own and hold these mega cap growers. We look to buy them on pullbacks. I'll come back to that in a second. But we think for fresh money, as we go down this path of maybe lesser recession risk, that opens the door for the cyclical component of the market, which in our work is up only a couple % year to date, to be the most attractive place to go with new money at this point.
Got it. Scott, thank you very much. Appreciate it with the advice. Scott Cronert from Citigroup, where he's the U.S. Chief Equity Strategist.
Still to come this morning, Airlines losing some altitude after those earlier gains in the wake of Delta's record results. All of them in the red. Will investors need to know when we return?
In 5 minutes time now, we do get the EIA natural gas change forecast 50 BCF on the prior of 72 BCF.
Really wanting SPY to break in some way. I'm kind of mixed on this because I kind of want the SPY to come back so I can trade the anchored VWAP, but at the same time, I want it to stay strong because I want Domino's to break up. So unless Domino's can stay strong without, the ES doing it, then I'm happy. But I really kind of want to see the Domino's move because I think that would be one of the better swing trades. And then what was the other thing you said? Actually, I just missed it. Too extended for me to like at the moment. Maybe if it pulls back a bit and then continues through. Yeah. So yeah, I think right now today I'm just being patient. I'll wait for if Domino's can break up on that short, Unity can break to 49.50. I'm short. Basically just all short plays, I think, today. Oh yeah, actually Snow's pulling back quite nice off that level now. I think there was another, well, it was Snap, wasn't it? Snap, yeah, Snap fought back quite nice off that level, coming into the VWAP. So everything's moving pretty nice. Yeah, I was watching AAL and UAL, and probably should have had. Yeah, I don't know why. I think people just have their preference. Delta is just probably because it's the airline I use, so I just pay more attention to it. And I guess they had the earnings, so I wanted to know what they were doing. For some reason, I did think their earnings was either after hours today or pre-market tomorrow. But either way, yeah. I still find that crazy how it can come out in line. Oh no, sorry, much better than expected and record high. And you're still down, what? I don't know. Oh, I don't have it up. That's fine. And you can still be down 1% on it. That's crazy.
Been a volatile morning for shares of the airlines in the wake of Delta's results. Our Phil LeBeau joins us with more, fresh off that interview with CEO Ed Bastian, sounding pretty optimistic about the rest of the year, Phil.
Oh, he's incredibly optimistic, Carl. In fact, he painted a picture of the second half of this year, which is basically an extension of the first half. And when you look at what they reported this morning, look, they beat on the top and the bottom line and beat by a wide margin in terms of earning $268. The street was at $240. And remember, just a couple of weeks ago, they raised guidance. So they topped even their raised guidance. Fuel costs in the quarter also a big contributor to helping the company beat the street. They dropped by 34%.
Yeah, it's crazy actually. I forgot about the stock, C Limited stock. But I remember I used to see that around like $250, and that one just stole off. This is one of the rare times though that the deviations did not work. So I remember trading this. I think the deviations was around here, around 200, 250. So obviously got long there, and yeah, that never got that bounce. That was a 10-year weekly chart though.
See that
so 1 minute remaining till we get the EIA natural gas.
The other airlines. Fortunately, we've been at it for a decade and we're ahead of the game, but we're going to continue to stay ahead of the game as a result.
Okay, yeah, we got the natural gas coming out as just had on Squawk, which was a good reminder. Again, normally looking for a fade off this release. So I'll switch it to a 1 minute chart. Again, we have about 30 seconds. Normally you see a reaction either way, doesn't really matter. And then you tend to see it kind of fade back to its opening value, and that's normally the trade opportunity. Let me just quickly open my futures. Actually, I've already got it open. Cool. Again, this is normally a futures trade. You can't really trade it from a stock perspective. None of the ETFs really move enough. 4 seconds. There you go. You get the spike to the upside. It looks like it's going to hit Anchor VWAP, and there you go. You start to get the fade. And there we go. 2 side be out now. There we go. Yep, cool. Out. That's exactly the trade opportunity. Yeah, that's normally what we see. We see it time and time again. You get the release. You get a spike in one direction. Again, doesn't matter what direction. You short that move and then play it back to its fair, or play it back to the pre-release value. So that's a nice trade.
And we have posted the weekly EIA natural gas change reports on the feed for all those interested.
Let me quickly see if I can grab up that the EIA report change. Okay, yeah, there we go. Here we go. Again, when we're using the Squawk as well, we're using Financial Juice, so shout out to them. Yeah. So again, this is just the release, and again, we'll actually compare that to the chart of natural gas over a longer term. Do like a 1 year chart. Oh, for some reason I can't. I have to do that manually then. But yeah, that's about a 1 year outlook on the natural gas. It has really sold off over here. 11.50, already down at the 2.6. So massive sell off, especially even since the year start. Just weak. But yeah. And again, these are normally important. Usually anyway, this is very seasonal. Again, you'll see this time and time again. This is to do with the storage. Storage will always be low in the winter. Storage will be high in the summers. Reason for that is, again, you don't need to use natural gas or any sort of gas as much in the summer, because you know you're not heating your homes or anything like that. Coming into the winter, obviously you need to do that a lot more, so it keeps everything the storage down.
Welcome back.
So again, that's what this report
your
means.
CNBC News update. For the first time ever, a daily birth control pill will be available over the counter in the United States. The FDA approved the O pill this morning, making it the first hormonal contraceptive pill available in the U.S. without a...
Again, the normal trade, again, the one we literally just got, is that move. Sometimes, and again, I don't trade this because to me, I find that a lot more of a gamble. Sometimes it will then push the other way and just drop and move. Other times, again, you'll just get that bounce or consolidate. So to me, I find it a gamble after the initial release, but the initial pop, sell off, that's 9 times out of 10, you'll get that move. Can't believe SPY came back into consolidation area. I'm sure UAL, but looking weak. Yeah, I don't really even pay attention to SPY until it coming into some sort of levels. So until it comes down to 446, I'm not paying attention to it. And UAL, I imagine it's moving relatively similar to Delta. Actually, they've already hit their anchored VWAP, so could be a nice trade. Where's your stop on it, though? Could see it coming back to maybe 56 and then selling off again. And compared to Delta, I guess it's looking... Oh, now I'm on the 1 minute, so I can actually see what's happening. That makes a lot more sense.
Including one that is very current, or an issue that's very current, namely the writers' strike and the very strong possibility that those writers will soon be joined by actors. I asked Mr. Iger what the impact will be.
Well, I think it's very disturbing to me. We've talked about disruptive forces on this business and all the challenges that we're facing and the recovery from COVID, which is ongoing. It's not completely back. This is the worst time in the world to add to that disruption. I understand any labor organization's desire to work on the behalf of its members to get the most compensation, to be compensated fairly based on the value that they deliver. We managed as an industry to negotiate a very good deal with the Directors Guild that reflects the value that the directors contribute to this great business. We wanted to do the same thing with the writers, and we'd like to do the same thing with the actors. There's a level of expectation that they have that is just not realistic. And they are adding to a set of challenges that this business is already facing that is, quite frankly, very disruptive.
So they're not being realistic?
No, they're not.
Why not?
I can't answer that question. I respect their right and their desire to get as much as they possibly can in compensation for their people. I completely respect that. I've been around long enough to understand that dynamic and to appreciate it. But you also have to be realistic about the business environment and what this business can deliver. It is and has been a great business for all of these people, and it will continue to be, even through disruptive times. But, being realistic is imperative.
What do you do in the interim then? Does AI start to write a lot of scripts?
It will have a very, very damaging effect on the whole business, and unfortunately,
the strike will.
There's huge collateral damage in the industry to people who are, who are support services. I could go on and on. It will affect the economy of, different regions even because of just the sheer size of the business. It's a shame. It is really a shame.
And I want to talk about parks in the time that we have left, if we can. Specific to attendance, there was an article in the Wall Street Journal that seemed to indicate that people aren't going to Disney World at the rate that they did certainly a year ago. And your fight with the governor there, or his fight with you. Is he having an impact, do you think, on attendance, his continued criticism of the company?
No, we see no sign of that at all. The article that you referred to was not accurate, actually. It was measuring attendance at Disney World on July 4th, which didn't really factor in temperature, which is about 100 degrees and 99% humidity on that day. But there are other factors as well. One is, and I think this is kind of complicated, but Florida opened up early during COVID, and created huge demand. And didn't have competition because there were a number of other states that were not open yet. So if you look at the numbers in Florida in 2023, or just recently, versus 2022, where not as much was open, and Florida was the only game in town, there's a lot more competition today. So against 2022, the state of Florida has been down. We actually track hotel tax revenue across the state, which is a matter of public record, and there are counties in Florida that have been down 6-7% recently. We also know that our competitors are discounting in that state. So there are some near-term issues in Florida that I don't think have anything to do with politics.
And not about pricing either? Because obviously, when it comes to pricing in the parks, you have a great understanding there of what that can do.
One of the things that we addressed as soon as I came back was, whether our pricing was right or not, and whether our pricing reflected value. I should also say, I don't know when the last time you visited Disney World. I say it's where the Disney brand lives in its most sublime form. Right. I still believe that. It's an incredible experience. It's a very, very popular business and product, and it's very successful, and we're not wringing our hands over it. There's some near-term issues in Florida, as we've talked about, but
I want to talk.
And pricing is not an issue. We addressed some of those issues.
So you're not concerned overall about some sort of a significant decline over time in attendance?
Not at all. No. I think you're looking at a comparison to last year, and it's very, very different, and we do not have long-term concerns about that business.
What about DeSantis, who's going to be on the hustings, so to speak, for the next year? And he's made this a part of his campaign, attacking Disney, saying it's a woke corporation. We put the company on a pedestal, but they've really embraced the idea of getting the sexualized content in the program line that I'm not willing to cross. I mean, that's what he said. I quoted DeSantis there. How do you respond to that?
Well, so far, what we've said publicly is that we are concerned that he has decided to retaliate against the company for a position the company took on pending legislation in that state. And frankly, the company was within its right, even though I'm not sure it was handled very well, it was within its right to speak up on an issue, constitutionally protected right of free speech. And to retaliate against the company in a way that would be harmful to the business was not something that we could sit back and tolerate. And so we have filed a lawsuit to protect our First Amendment rights there and to protect our business, frankly. The other issues that you referenced, look, the last thing that I want for the company is for the company to be drawn into any culture wars. We've operated for almost 100 years as a company, making product that we actually are proud of in terms of its impact on the world. I joke every once in a while we're there to manufacture fun.
Well,
we're there to tell great stories.
I know, but you can't be happy when there's literally Nazis standing outside the front gates of the park.
That was horrifying, quite frankly, and it's concerning to me that anyone would encourage a level of intolerance or even hate that, frankly, could even become dangerous action that could be turned into some dangerous act of some sort. So it's concerning to me, but I don't really want to engage in the specifics except to say that it's not our goal to be involved in a culture war. Our goal is to continue to tell wonderful stories and have a positive impact on the world. We are a preeminent entertainer in the world, and we're proud of our track record there. The notion that Disney is in any way sexualizing children, quite frankly, is preposterous and inaccurate.
Well, this is going to keep going on, but you're going to, I mean, do you ever feel like you need to engage in an even more strident way, or you sort of want to stay kind of where you are? The lawsuit will speak for itself.
We're going to keep doing what we do best, and be proud of what we are doing, and be mindful of the environment. Of course, I've said this publicly. You know, we're sensitive to the interests and the needs of the great audiences that.
Market, right? Surfaced. What jumped out at us is like we're still waiting for solutions, right? So we upgraded the stock when Bob came back on the idea that he's honest, he's decisive, and we're waiting patiently.
Don't know why this thing keeps pausing.
To see the payoff.
No, I think talking about a quarter that just ended that probably wasn't great, but I'm curious about your thoughts about that, and then about direct to consumer, which obviously is still such a key part of the investment thesis.
Yeah, I'm smiling because when I listened to you and Kramer right after the interview, Kramer went right to that. Well, the quarter doesn't sound good. So we're at 89 cents for the quarter. Street's at 105. You know, they've been saying things, there's been some stuff in the press about some weakness. I think that's clear. The longer term issue, though, is to your point, is around DTC. And I think the lack of owning 100% of Hulu is limiting what they can say. And I think that's the frustration, right? The more that you need to fix DTC, but you can't do anything until you get Hulu in, is just a frustrating point. And I think what everyone's worrying about now is just in the short run, there's not a lot of earnings momentum. In fact, there's negative pressure, as you identified. And you need to get to the buy-in of Hulu to start another narrative, which is how we're going to integrate Hulu and Disney+. So we're in this really weird pattern of just waiting for more information, but seeing things get weaker as time goes on.
Yeah. On ESPN, what are your thoughts when he talks about a potential joint venture or even equity partner in some way? Do you go to Apple? What do you think about there as a possibility?
Yeah, you know, a couple weeks ago, you and I discussed the Disney bundle. Our view has been evolving, and our view is that Disney should have ESPN really in the bundle with Hulu and Disney+. That sports on a standalone basis, and you were pushing him really well on this, I thought. You know, you kept going back to, well, is this a good business? Will it make money? We didn't get answers, but I thought, and I still think the idea is that ESPN should be embedded in Disney's content to have sports drive those products. So, you know, I love the fact you were trying to get an answer from him, but I still think that's the question, which is, yes, you can bring in partners, but is this a good business, and what's going to have to change to make it a good business? It stands as a very high fixed cost business that it requires a ton of either subscribers or high price points to make it a good business, and we don't see that, David. So, yeah, I was interested in that to bring in third parties, but it doesn't answer the basic question that you were trying to get to: is has this business make money on a standalone basis, right?
Right. Well, I mean, it's less than a month ago that you wrote a report about the Disney bundle being able to save DTC, which you're viewing, as you just said, I guess, Hulu, ESPN, and Disney Plus all being together. You think that is the ultimate solution to sort of being able to secure growth in the future?
Yeah, see, when it comes to sport, as a sports fan, you can see it from the guy behind me, you don't have all the sports in all seasons, right? So the risk is with ESPN over the top, that once you get to baseball season, you cut ESPN over the top, or you get to college basketball, not a college basketball fan, you drop the service. You need to basically create either an all-in-one sports product with Turner or Fox Sports or NBC Sports, so all sports could be there, or you need to put sports inside someone else's content to get the NBA viewer into the Disney Plus environment, right? So it's either or. You need to have everything, or you need sports to drive engagement in a single app, right? So maybe when Bob is alluding to partnerships, maybe he's talking about partnering with other networks that have sports. Maybe that's what it could be. But I think you need to solve the issue of how does ESPN work a la carte, and we don't have that answer yet, right? So to me, it's putting, as we see now, put sports into Disney Plus and Hulu. So you and I would go into there, occasionally watch sports we want, but it would not be the sole purpose for going into the product.
Got it. Well, listen, there's a lot of questions, as we know, and Iger's going to have a few more years to figure them out, potentially. Michael, as always, certainly appreciate you taking time. Thank you.
Yeah. Thanks, David. Be well.
Should note, programming note here, if you want to, you missed it or you want to watch it again, there's going to be a full exclusive interview with Iger tonight at 8 p.m. In other words, we're rerunning it. That's what we're doing. I said it like it's going to be a new one. We're going to rerun what we did this morning with Bob Iger tonight, 8 o'clock. Carl.
Yeah, that live would be a long day for you, David. You've already done a lot today.
Yeah.
David Faber in Sun Valley. Take a look at some S&P gainers here as we're still just a few points shy of 4,500. Let's see. Got some travel in there, casinos, chips 1 month high, Alphabet 4%. Back in a minute.
Okay guys, I think I'm going to end the stream up here anyway. Again, kind of set the alert out for the key things. Plug if it comes into 1287, potential short bias. Unity going to be the main one at 49.50 or higher as a short. Same thing with Domino's. If you can kind of start breaking above 393, going to be patient but kind of wait for it to push. Once we start seeing a bit of weakness, then obviously we'll look to enter those swing shorts. Again, don't really need to get in them perfect timing because they're swing trades, but obviously the better time the better. The Snap trade currently holding quite nice, pulled back off these levels, currently holding VWAP. Probably going to depend on what the overall market does, as we are kind of consolidating since we bounced off the futures VWAP. So we'll see if we can break lower on that. If so, we're going to have an intraday target of the anchored VWAP of 1336. I think the only other thing we were paying attention to was Delta today. And again, same kind of thing, we are now actually getting a pop out of nowhere. Which could be nice if we can start breaking the highs again. Want to be seeing us hit around $51 before we start trading this as a swing short. So that's going to be my main focus for that. So I hope you enjoyed the stream anyway. Again, we'll have 2 videos out today. I think we're going to focus on Delta and Unity. But again, leave any comments if you want any other stocks analyzed. Otherwise, see you next stream, and that's it. Peace.